Hey, it's Arjun here, Director at InvestorKit Buyers Agency, and you're tuning in to the InvestorKit podcast. Today's episode, we're going to go into commercial property. We're going to be speaking to a financial planner who's invested in commercial property himself using InvestorKit, and that too multiple times. And lastly, I'm going to have Chris, our head of commercial, on the line with us too. Now, some pretty cool things about today's episode is that the guest on the show is not only one of our valued clients named Raimon, but Raimon's from MBAFS, so that's mbafinancialservices.com.au, who are actually my financial planners. So there you go, I just gave it away. Who are the financial planners that support me with my own decisions and my own wealth planning and protection? It's Raimon himself and the team. So it's pretty cool to be able to chat to him from the other side of the view, not from him giving me financial planning support, but from the angle of him as a client of ours at InvestorKit. And so this will show you that financial planners also invest in property. It's not just all shares and managed funds and things like that for them. They too want to add property. In Raimon's case, he's got residential property, commercial property purchases with us, managed funds, businesses, all that sort of stuff. So pretty cool guy to listen to and be able to learn from about why he did commercial investing, why he chose the team at InvestorKit, and what some of the deals look like as well, which is what our head of commercial, Chris, goes into on this episode. So we'll talk to Raimon today. So let's jump right in. Welcome to another episode of the InvestorKit podcast. Raimon, it's great to have you here, my friend. And Chris, our head of commercial, welcome back for another one.
Thanks for having me.
Awesome. Chris, I know we've been keen to chat to Raimon today because today is more about not just the sides of commercial property where we talk about, a particular thing to focus on or tips to focus on or unpack a particular concept. But today we're actually going through like the journey of someone who's gone from residential investing, different types of asset classes as well, and then added commercial to the mix, which would be so exciting to run through. But at the same time, it's not just someone. Raimon, who joins us today, is actually my financial planner and supports me personally. Obviously a great financial planner too. And so mate, we're pumped to have you on, Raimon.
Thanks. I'm very pumped to be here.
Yeah. Mate, I guess why don't we start off with just talking through firstly your explanation around commercial property today and how that's come into the mix. And I think that's important because when people think, financial planner, we're straight away talking down, shares or other things, protection. But I guess in your world, you're extremely holistic and diverse. And for yourself, you've now considered commercial. It'd be good just to start on why that and how that's come into the mix for you.
Okay. I guess it started when I did a course with a good friend of mine, and she really wanted to get into property. I knew the benefits of building up a property portfolio, but just hadn't actioned it. So it's one of those things where all of the theory on why, but you just didn't get around to doing it. And she really motivated me to go through, it was actually a Rich Dad, Poor Dad sort of course that we did together. I won't tell the long story, but we ended up purchasing some property together. So we have now 7 properties in New Zealand, and I recently just sold one here in Adelaide. So we built up this property portfolio. It is actually quite time consuming. So I'm not going to get you, you're not going to fluff it up and say that property investing is all just hold a property and you don't have to do anything. Once you scale it, I guess you have property managers helping you. You have to have a really good team around you, but it is still time consuming. You record keeping for accounting, making decisions on, do we renovate? Do we sell off a property? Do we, move the tenant on? They're all decisions that you have to make. So for me, it was more looking at, we've got a property portfolio now. Do we look at trying to scale that into something a little bit more, I'll call it easier to manage. And I believe commercial is just got that, usually a bigger deal size. So you might have less of them, and you also have a lot less work because the tenant will usually usually treated like their own rather than an investment property where a tenant, especially for some reason New Zealand tenants, I think can be a little bit more demanding than an Australian tenant, believe it or not. I don't know why, it's cultural or something, but so yeah, transitioning for me was more about ease and simplification, as well as that cash flow as well.
Well, as a Kiwi, I can say I'm definitely more demanding, and no offense to my fellow Kiwi families as well and friends. We just know what we want, and we try to get what we want, and there's nothing wrong with that in life. But unfortunately, we will upset a few people on the journey or the process there.
No one's upset me, but it just seems that changing a light bulb in Australia, we can do it ourselves. Over there, it's like, oh, can you just help out with this X, Y, and Z? So a little bit different.
So Raimon, you've built quite a substantial portfolio in your past time, and so with all your experience in investing in property, you obviously started with the residential space with the mum and dad. The Rich Dad Poor Dad, after the Rich Dad Poor Dad seminar.
Yep.
You quite a few residentials under your belt. How was what motivated you to invest in commercial property?
I think it really is that cash flow. In my particular case, it was more around, I had the New Zealand portfolio because we're crossing continents here and different dollars, New Zealand dollars versus Australian dollars. And New Zealand property at the time I was buying it, which is about 5 years ago now, cash flowed very strongly. And that cash flow just got bigger and bigger and bigger. And I sort of wanted to replicate that in Australia, and our cash flow here isn't as high, but commercial property does give a little bit more cash flow. I guess maybe 10, 15 years ago, a lot of property was sold on negative gearing, and that I've never really used that as a strategy for myself, because I think if you want an investment, the investment should be putting money in your pocket and growing as well. Whereas negative gearing is basically you're having money taken away from you, so you're making a loss with potentially some sort of benefit in the future. So for me, cash flow was very important, and commercial property does provide a good level of cash flow compared to residential. Not always, but in most cases, yeah.
And Raimon, when it comes to commercial, I think one of the good things about your journey in that transition is you've truly followed what I feel is the traditional and I believe the right way to get there. You build a residential base first. So you've got those compounding growth assets that are easier to leverage, easier to scale up at the start, and then also give you that ability to buy and sell quite effortlessly as well, because you're not always looking for that investor tenant. You're not always looking for investor buyer, sorry. And it allows you to also continue to leapfrog with that leverage because the loans are a little bit easier or better to get. And then you've moved to also carry on, diversification through business, through other investments, like a financial planner truly should, right? You're demonstrating what most should be doing. And then now in commercial. And so with commercial, you also went to get a couple in quick succession using our team. Could you go through and explain, I guess, the differences for those who are thinking of commercial investing and looking at it versus, hey, Raimon doing it on his own or Raimon using InvestorKit and working together, having a team around you? Because for many people, they see you as their team. So how is it that Mr. Team itself is now team building? Could you go through that a little bit more?
Yeah, okay. So I guess with my progression, and I hadn't met Arjun 5 years ago, so I built that portfolio myself, which easiest way to put it is you need to have goals in place. You need to be extremely diligent. You need to wake up at 5 o'clock in the morning. You need to research the areas. You need to put offers on. You need to ring up agents. There's a lot of work if you want to do it really well, property investing. So I did that by myself, and I'll just say that you need to do it. It's almost like a full-time job. I was doing it before work. So it was, 2-3 hours before work sometimes. I would have to be going through the process, And it's not just putting on the offer, it's getting the finance, getting the lawyers, getting your team around you to help. So scaling a portfolio is time consuming. And for me personally, I needed to go through that training session with the Rich Dad team to see how it works, get the confidence, also pay quite a lot of money up front for them to train me. So I was really motivated that, hey, I'm not paying this money up front to not go out there and invest. So when looking at commercial property, I'd met you, Arjun, and then obviously Chris, and it was these guys do it as a full-time job. They do all the research, they know the areas, they know what they want to achieve, they have all the connections with all the real estate agents. So for me, it's pretty much just a no-brainer to go, I know it, I get it, I understand it. Do I personally want to go through the time and effort to try to get the best investment for myself, or do I want to outsource that to a professional team that's going to do it much better than me? I'm not gonna lie. You guys live it and breathe it, so why would I want to do it myself? Then once you've come up with that decision and say, okay, I'm going to outsource it, it's the weight was lifted off my shoulder, because I know that I've got a team behind me that are going to be motivated on getting me the best outcome. And it's great, you do all the cash flows, you do everything, and all I have to do is make a decision on yay or nay. Do I like it? Does it feel right? Does it fit with what my goals are? So that was my experience with you guys. That is awesome. Thank you.
That's great feedback, Raimon. Thank you for that. You're right. You've done it all before. You've experienced how long it takes and how much effort it is to put into commercial property investing. Definitely, the due diligence part is a full-time job in itself, and obviously you've been through the ringer to figure that out. But now that you're a busy professional helping and serving clients yourself, you know that you need to palm off that sort of that task to someone that does it every day, that does it full-time, 8 hours a day. So no, mate, thank you for that.
Yeah.
Now,
also,
there are a few
can I add,
sorry.
That commercial is a little bit of a different beast to residential as well. I would have to basically learn a new strategy really as well. So, and that would be something that, where do I start? I'd listen to lots of podcasts. I'd try to, go find a mentor and that's invested in commercial property before. So that in itself is just another hurdle that, I've outsourced to you guys, the professionals. So, yeah.
So there are different vehicles where you can invest in commercial property and residential, Raimon. You can invest in your name. You can invest via a trust, via a company. However, you've taken a different approach and you've invested via your self-managed super fund.
Yep.
Now, what led you to decide on using a self-managed super fund for your property investments, specifically your commercial investments? And can you walk us through sort of the process you took to set up your self-managed super fund and start investing?
Okay, all right. So just by the way, being a financial planner, this is my own experience. I don't, if you're listening to this is general information only. I'm not suggesting that people go out and set up self-managed super funds without getting professional assistance. But so for me personally, a self-managed super fund is ideal for property investing, for that long-term wealth creation for retirement. And property, as you can all agree, is not something that you get in and out of quickly. You should be buying and holding for the long term, or at least have that intention that it's a get-rich slow scheme. It's not a get-rich quick scheme. So obviously superannuation, everyone's balance in superannuation is building. The government are legislating higher and higher contributions into superannuation, and they want people to be looking after themselves in retirement. So it's a great vehicle for long-term wealth creation. And my personal thoughts on building wealth is to purchase lots of cash flowing assets with other people's money. So that's with debt. And you can do that through a self-managed super fund. I set mine up, I can't even remember how long ago now. It was definitely over 5 years ago. I personally used an organisation that at the time, they're an administrator. We just went straight through the administrator. I can do that quite easy as a financial planner. But generally nowadays, I focus more on partnering with accountants and usually the accountants of my clients. And we set up a self-managed super fund in order to use that vehicle for investing in property. Again, a caveat, self-managed super funds aren't for everyone. There's a lot of compliance. You are the trustee of your own fund. So there's a lot of things that you need to be mindful of, and why I would say you need an accountant. You need a really good lawyer a good accountant that specialises in that area. Lawyers to do all of the trust deeds and compliance work, and also a financial planner. Usually, if you've got those three on board, and a good mortgage broker that can understand those types of mortgages, because they are different mortgages, that's a good team to have on your side to be investing in property. And you get that leverage, which is what I'm, at the end of the day, the leverage is what I believe gets you to the end game in the best possible way, but you have to be comfortable with debt.
Yeah, it's a good point about that leverage. And if I'm not mistaken, Raimon, there's also that component where once it's getting positive cash flow to a higher and higher level, there's also tax advantages there from a holding place, isn't there?
Correct, yes. So superannuation is taxed at 15%. Capital gains tax are taxed at 10% within a super fund. Now, let's just say I'm not at 60 yet, but let's just say I get to 60 years of age, I retire, I can move my money into what's known as an allocated pension. And then from that point onwards, there's caps and there's lots of traps and tricks, I guess, but depending on my account balance, etc., then all of my income is totally tax-free. And I may not have any capital gains tax to pay as well at that point if I do sell some property when I'm retired. So it can be extremely tax beneficial for those people that are building money, building wealth for their retirement.
Yeah, that's a great outcome as well, because then not only is it going to have that outcome, but the main thing is you essentially having a higher positive cash flow at the end of the day, because positive cash flow doesn't just come from the rent you get. It also comes from the tax and expenses you have and how that's managed. Chris, I might actually throw it to you for this one, because you did a phenomenal job in sourcing some pretty interesting deals and things with some X factors there. When you break down some of the deals that we purchased for Raimon in the commercial space, I guess without giving away the location or the exact addresses, but what are some things that stood out for you when you're like, hey, this one makes sense for me?
Yeah, so there were a couple of different asset classes that we invested in Raimon just to diversify his holdings. I won't name the locations, but one was a physio with a 5-year lease, where we were able to get Raimon stamp duty exemption, so stamp duty free investment. I think the increases were somewhere in the vicinity of 3.5%, could be 4%, but we got him a 5.5% net yield on that with the 5 years remaining on the lease. So that was a pretty good one. But also,
yeah,
we also got him an industrial unit where it ticked all our boxes, all our minimum requirements, 3-year lease, 3.5% returns, 3.5% increases, the 5.5% net yield as well, with their 3 years remaining on the lease to a distribution company. And that one of the great aspects about that property was it was only just a short drive to the airport. We did a thorough DD process, and we discovered some things wrong with the roof of the property, but we got all those things rectified prior to settlement. So at the cost of the vendor. So that was also a really good one.
When I hear that, it's also important. I think this is a big thing for people learning about commercial. Chris and I, we do deals that range from 5.5% to 7% net. And you'll see us just as excited for a 5.5% net deal as some 7% net deals. And Raimon understands this too. we want to look at a deal as holistically as possible. So when you're hearing these podcasts or hearing stuff on social media, watching them, don't get overly excited just because something's got an 8 or 9% net yield. We can get those, but do you want to have a 32nd floor, small office maybe in a city or an area with a vacancy rate of 20% plus in its CBD? I don't think you do, right? And so net yield has components where they have a measure of risk, they also have a measure of strength in the deal, and they also have a measure of demand in the area. As long as we can see that other parts outweigh the net yield that's slightly smaller, for example, there were healthier deposits on these purchases, which allowed us to make sure that we could focus on not having to just having to surge up the rental yield just to make sure that we could meet that loan repayment because we had the comfort of the deposit there in the SMSF. The second thing is that we were able to focus on the tenant types, industries like medical, industries like industrial properties, physiotherapists. The third thing was long leases. Isn't that the whole dream, right? A commercial investor, like Raimon pointed out at the start, wants it to be passive, right? You don't have property investing to not be passive. You want it to be passive as to get passive income, right? And so from that perspective, that was important. And then you've got increases and stability and location diversity. And so I think when people are assessing commercial property, we've got to be really broad, holistic, and deep. And if you're able to then do that, you can then start to go, well, I can be in different locations. I can increase my strength in other ways. And the net yields, they keep going up because those increases over the 5 years keep going up. And we're in areas that are hotly is not even a word, I think, but are hotly demanded. And we are seeing them surge. So I thought I'd just share that for those learning about numbers and yields and vacancies and what they mean. But in the summary, Raimon can see for the next 5 years on some of these assets, rents continue to grow up, yields continue to rise, tenants in industry types that are in demand that are going to continue to grow. So that's my summary. That's Chris's summary of the deal. Raimon, I might throw over to you for one last question, which is you've obviously moved from residential into commercial, multiple investment entity types, managed funds and other things that you do as well. You're as holistic and diverse as it gets as an investor, but I'd like you to take a step back and go just on commercial only. What are some of the biggest tips that you can give people in today's episode to say, hey, when you're on your own journey, here are my top 2 or 3 tips?
Top 2 or 3 tips. For me, it's actually use InvestorKit. So I honestly,
I promise I didn't set that up. I promise
No.
I did not set that up. There's no credit card machine on the table. We just said, Raimon, over to you. There was no game played here, guys.
No, it is a different beast, and like I said, I did the resi stuff. I learned that I just wouldn't know where to start with commercial, and even coming down to, I know Arjun, when we were talking about the first deal you explained, the one in the self-managed super fund, it's in ACT, by the way, so it doesn't matter, you can know the location, and it's in like ground floor of a sort of a high rise, I guess you could call it, and a lot of population. And when looking at residential property, you don't really want to be in a location that a lot of stuff's popping up around it because you've got the supply and demand. So I just asked a question of Arjun, and Arjun turned around and he said, well, you want a lot of people in that area because it's a commercial property. You want people to be there so that they can visit the place, the physiotherapist, for example. So just having that it's the opposite of residential. So just having that input and insight may have made me go, oh, I don't want that investment if I was personally looking for that myself. So having someone or a team behind you that can explain that and say, no, this is why this is a good asset, and talk you through that, I think is a key tip. Other key tips, I guess, would be mortgage. So especially if you're going to use a self-managed super fund, you need a broker that is familiar with those types of mortgages. So that's if it is going to be in a self-managed super fund. If it is going to be in a self-managed super fund, I'd always just suggest that you have to have a good team that understand and know self-managed super funds. So your accountant, your financial planner, and your mortgage broker, they just have to understand and know how to use those structures, which is very important. And what was the question again? You wanted a tip for 3 top tips?
No, that was it, man. You nailed
Right,
it.
right.
You know, giving tips on finance and structure there, giving tips on just you building a team around you, but also looking at it. And that was the one I loved the most. Looking at it like the opposite way. You nailed it, because supply in residential isn't your friend if you see listings that are picking up, and then if you see construction that's picking up, and population growth means there's an ability for more people to come there, which also means more houses, right? But in commercial, you want more people to come there, because in business precincts, that's thriving business, that's thriving trade, that's more potential customers. That's key, right? So really good pick up there, and explain to someone, because when you're buying residentials for most of your investing life, and you transition to commercial at the later parts of life, Raimon, we're not saying you're too old, by the way, just the later parts of life. It just means that you are in a perspective where you think of the ways of investing with the resi hat on. And that was good to see that shift you picked up. And then that is a tip for people listening as well. So thank you so much, mate. Really appreciate you jumping on the show. And I've also given away to people listening in who my financial planner is. So hint, if you want to reach out to Raimon, Raimon, what's the best way people can get in touch with you and the team?
Yeah, just MBA Financial Strategist is the firm that I work for. So just find me online. There's a booking, free booking sort of line. You can just go in, book in a time. You see my calendar. Just even if it's a quick chat over the phone, just to see where we can help, what we can do. That's probably the easiest way to find me.
Awesome, Raimon. Thank you so much. And by the way, when you say MBA, is that MBA because you've got the MBA sitting somewhere behind that? I see some certificates on that counter. Someone's showing off the degree there.
It's not, no. My business partner is actually Mark Borg. So MBA is Mark Borg and Associates. So that's where it's originally from. But I've been here for 22 years now, I think, or probably even longer. So it's good business to work for, but definitely 9 advisors. So all of them I try to educate in the property way. So if I'm not your right financial planner to work with, then a couple of the other guys here would absolutely be perfect for any prospective clients.
Amazing. Thank you so much, mate. Thank you, Chris. Thank you, Raimon. And thanks, to everyone listening, catch you on another episode of the InvestorKit podcast.
Thank you.
Thanks, Raimon. Thanks, Arjun. Bye.